Good evening, everyone, and thank you so much for taking time out today evening. I hope my audio is loud and clear. So some of you can just put it on the chat, put your hand up. Uh, so we are very, very clear and good to go. Whether my audio is loud and clear and when I'm visible as well. Getting a few responses. I need a few more, so I think confident enough that bandwidth is not an issue. Super. Thanks, guys. Great. So I think so I've got a lot of responses, which is saying that the audio and the video is okay. So again, the next episode of Walk the Stock, we've got a very, very special guest today. The guest is Randy Watts. He's our Chief Investment Strategist at William and Company. So Randy, welcome to the show.
Thanks very much. Really happy to be here. Hope everyone in the audience is safe and doing well. Obviously, it's a very scary time right now in India with the pandemic, and hope everyone is at home safe and handling what's going on right now.
Thank you so much for your wishes. So for all you folks out there, Randy is the Chief Investment Strategist at William O'Neill Company. He manages the company's global research team of more than 40 analysts. We cover markets in more than 70 odd places with offices from Los Angeles, London, New York, and India. So I think a special thanks to him for doing this live pretty late in the US at this point of time. Randy's track record has been pretty wide and diverse as well. He has a huge track record of managing both long-only, long-short hedge funds, mutual funds. He's worked previously with Forger Hill, the Boston Company, Freedom Capital Management. He's graduated in American Studies, and he is a CFA in terms of an education profession as well. So Randy, that's your introduction. Thank you very much, and really appreciate you taking out time. It's pretty late in the US.
Well, thanks again. Really excited to be here, excited to talk to the audience, and I love talking to our friends in India. As you know, I do CNBC, TV18 a lot too, so I'm hopefully learning a little bit more about the Indian market.
No, people love to hear your thoughts as well on your TV18 interviews as well, Randy. So that's the feedback that we've got. So I think if we start off, right, and we are trying to break our conversation into three large perspectives, because you are probably looking not just at the US markets, you're also looking at emerging markets and the other developed markets as well, and other aspects beyond equities as well. So we've read your articles in terms of Bitcoin that you posted on Forbes a few weeks ago, or whether it comes to commodities and the commodity cycles, precious cycles as well. So we'd love to hear your thoughts on all these perspectives put forth. But the first question, Randy, that I want to put forth to you is, clearly I think India is getting hit with the second COVID wave at this point of time, and that is probably dragging our markets quite significantly. When it comes to the US markets, it has been an outlier and it is outperforming, though we saw bouts when deals started moving higher and there was apprehension in terms of tech stocks. But how are you viewing the mother market at this point of time? How are you seeing the US markets, its positioning, and the way forward for the industry?
Sure, that's a great question to start with. So there's really three things going on with the US market. The first is, well, the US did a very bad job, especially last year, handling COVID. It's done a very good job on the vaccine. So we've got two very good vaccines, the Pfizer vaccine and the Moderna vaccine. We've bought a lot of doses. We've done a very good job rolling this out. In particular, one of the things that's helped the rollout is they're using commercial pharmacies, in particular CVS and Walgreens, to get the vaccine distributed across the country. And Walgreens and CVS have actually done a great job on this. So you're looking at a point now where over 40% of the US population has already received their first dose. 25% of the population is fully vaccinated. They've done a very good job on seniors, so people older than 65 who are most at risk. And so while we did a bad job on COVID last year, we're starting to turn the corner in terms of the vaccinations. And what that's going to mean is that as the year progresses, more and more states and businesses are going to reopen and get more back to normal. I don't think we're going to be 100% back to normal by the end of this year, but we're going to be a lot closer to it. And that's going to lead to really a ramp up in the US economy. One thing that's important to note is there's about 1.6 trillion US dollars in excess consumer savings that have occurred during COVID because no one's been able to go out and spend any money, much like is unfortunately happening right now in India. And so this moves to my second point. There's a lot of stimulus coming, and that stimulus is coming in a couple of buckets. The first, as I talked about, is that pent up consumer savings. The second is there's a lot of money coming from the government. We haven't even spent all of the stimulus that Trump put in place. Now we have this $1.9 trillion stimulus from the Biden administration, and they're talking about an additional $2 trillion infrastructure bill. So there's a lot of money that hasn't come into the US economy right now that's poised to do it. And then the third point, which is that the Fed remains very, very accommodative. If you look at it, real rates right now in the US are actually negative. So the real rate is what the rate of the bond is trading at, basically minus the inflation rate. Right now in the US, that's negative. The 10-year bond's about 156. The inflation rate's over 2%. And the Fed continues to buy in bonds. They're spending about $100 billion a month right now, so they continue to expand their balance sheet. So the reopening plus all this stimulus plus liquidity means that, in my opinion, stocks are going higher. Now, we've had a big move in the US market, but I think there's one more big move up at least before this is all done. And I expect stocks to trend up in the second half of the year. And what that's really going to be driven by is earnings. So I think the price earnings multiple, or the valuation component of the market, has already peaked. So I think from here, P's will be flat to contracting, but earnings are going to be a lot better than what is currently estimated on Wall Street. And you're seeing that in this first quarter earnings season, where over 80% of the companies that have reported have beaten the earnings. So earnings are going to be very strong this year in the US. I think that's going to drive the market higher. Though longer term, I worry about inflation and interest rates, but I don't really think that's going to be a 2021 problem. I think that's more like a 2022 or 2023 problem.
Wow, great to hear that, Randy. So I think again, two folds to the logic that you put forth that I want to ask you. The first element obviously lays on the fact, on the thesis that you put forth, that earnings will remain strong and more discretionary spending will come through, both in terms of capital spending from the government balance sheet and individual spending when it comes to their individual checks that have got disbursed into their own accounts. Now, where is this going to probably get deployed? So if you're probably looking at sectors, right, is it more discretionary that will probably be doing the talking when it comes to earnings upgrades? Is it more capital intensive sectors that you're probably looking at? And is it more in terms of more defensives that will now start taking a back seat, at least for the next couple of quarters in perspective?
Yeah, the market's really been driven this year by small cap stocks, which are more cyclically oriented, and value stocks. And I do think that rotation from growth to value that's occurred this year is not yet over. So I do think areas like consumer cyclicals, commodities, also financials are going to do much better this year. They've had big moves, but I don't think that move's over yet. So I think particularly things that cater to the consumer in areas where money wasn't able to be spent, places like travel and leisure, are going to be very strong this year. I think things like airlines, cruises, theme parks, et cetera, are all going to turn around. There's actually a massive shortage right now in the US for rental cars. Rental cars are renting for as much as $200, $300 a day right now in some markets, which is unbelievable. So I do think the cyclical components have not yet had their final move. I think as earnings come through and those earnings estimates have to be raised by analysts, I think there's another move there. Long term, we still like growth stocks, but I think right now the value cyclical team is leading the field, and I think that's going to continue for a few more quarters.
Wow, great to hear that. So I was reading through your articles in terms of cruise bookings going off the roof. The rental part, I was not sure. So that's an insight that you probably driven right now. What happens to tech and tech-related stock? Because they clearly are moving in tandem to what yields happen, right? Yields move up, tech stocks or NASDAQ corrects. Yield cools off, they start moving higher. So how do you equate? I mean, for all investors based out in India, I think how are they expected to see things like this? If NASDAQ corrects, is it more because of yield, or is it because they've moved significantly higher at this point?
Well, I guess the first thing is that I think one thing people do underestimate is even though the reopening of the economy and the stimulus is going to favor cyclical and value stocks more, it's still going to help growth stocks. So it's not like when the economy gets better, that doesn't help Apple's earnings. It does. It's going to help Apple. It's going to help Microsoft. It's going to help all these, Facebook, all these big tech stocks. And I still prefer those stocks on a 3-year time period. So when some of these stocks really pull back or lag, I think that can provide opportunities for purchases. So I do think that there's still good ideas, and I'm still looking, at least in my own portfolio, to try to add names that I think have great long-term staying power. That being said, the earnings surprises are going to be much bigger on the value cyclical side. And so I do think that is kind of what carries the day. So I think what we're going to likely happen is as earnings accelerate this year, value and cyclical lead, but I think sometime next year, there's going to be a shift back more towards growth. But I do think for both sort of sectors that valuations in terms of the absolute Ps are probably capped from here. I do think rates are going to keep moving up. So rates went from basically 50 basis points to 175. They're back down this morning to 156, 157. I think we're headed higher over the course of the year. I'd expect us to end the year with the 10-year. By the way, when I quote the yields, I'm always talking about the 10-year bond, the US 10-year bond. I would expect the yield on the US 10-year bond to finish 2% or higher at the end of this year. So I think the trend in rates is up. I don't know how much of your audience buys US bonds, but my advice would be there is I'm not a fan of the US 10-year. I would not be buying that asset right now. I think rates are headed higher, and I think bonds are going to suffer.
Wow. No, I think there's a lot of interest, Randy, I think, and a lot of Indian investors at this point of time are looking at US stocks, and there are a lot of platforms which are offering alternative investment to US stocks. Having said that, I think the risk factors, as you pointed out, right, if you're probably envisaging yields to top up 2%, what are the inherent risks over the next few quarters? Because I think what quarters are getting raised is when the Fed will start unwinding, and that probably looks at in FY22 itself. But inflation, if it starts moving higher beyond 2%, much faster, with yields reflecting the same, will the balance sheet unwind happen faster? And would that provide an upside risk to what the markets are facing right now?
That's a great point, and I agree with it. I think eventually what's going to happen is the Fed is going to have to move faster and stronger than they think. But right now they're so worried about employment and they're so worried about the economy that they're going to err on the side of being late. So I think they're already chasing the market, right? So CPI is already running close to, I think it was 2.4% last reading. And PPI, which is the producer price index, so that's the inputs into like manufacturers, et cetera, that last reading was up 4.2% year to year, okay? So the price inflation has already started. You can also see it in stocks. You can see it in real estate here in the United States. So I think eventually the Fed's going to have to move more dramatically than everyone expects, but I think they're going to be late on that. So I don't really think that's going to be a 2021 event. Okay, I think that's a next year event. And until the Fed does that, the market's probably going to run. Basically, what's happening in the U.S. right now for your viewers is that people are nervous about inflation and they are nervous about rates and they want some protection on that. And they can see the economy's getting better. So the money's really going into two main buckets. It's really going into real estate, and it's going into stocks because people feel like at least there's a hedge there. And we can come back to it in a little bit. I saw one of the questions about crypto. We'll talk about that in a bit. But that's really where it's heading. And so I think both those prices are going up until liquidity slows down from the government and the Fed. And I don't see that as a this year event. So I'm sorry to be repetitive, but I still think the outlook for stocks in the US is pretty good. I also think the US market's going to look good relative to a lot of foreign markets because I think the earnings growth is going to be slower. We're in the rest of the world versus the US. We're kind of ahead of the curve in terms of getting everybody vaccinated. We're going to be ahead of the curve in reopening. And that means that the US should actually have some of the faster economic growth relative to a normal time this time around versus previous years.
Yeah, I think the stats and the data probably is pointing to what you're saying, Randy. Now it gets me to the question in terms of if the markets are expected to remain strong, as you have been pointing, right? What happens to currencies? So what happens to US dollar in particular? What happens to the dollar index? And if there is a strong inflow towards dollar-denominated assets, how will emerging currencies react?
I think people are moving towards the dollar right now because of fears about COVID and how many governments and countries are going to react. I think it's more about a weakness in other currencies than a strength in the dollar. Longer term, I'm actually worried the dollar is going to be weaker on a secular basis because of the amount of leverage the US government and the Fed is putting on its balance sheet. Before the pandemic, the Fed had a little over 2 trillion on its balance sheet. It's now north of 7. So we put 5 trillion on in a year. In addition, the US federal government is also levering up. And I think what that means is that eventually that is going to cause dollar weakness. It's not happening right now because people are worried about what are the responses going to be in places like a Brazil or in India or in Europe, et cetera, et cetera. And so that right now is causing some temporary strength. But I think the amount of leverage the US is putting on its balance sheet is not good for the currency long term. So, right now the dollar is kind of the best house in a bad neighborhood. But I don't think it's a sign of great fiscal health of the US balance sheet.
So ultimately, Randy, where are you seeing the dollar in respect to the rupee? So if I would say, do you see significant appreciation, depreciation? What's your viewpoint vis-a-vis the rupee?
I think until we get more clarity on the pandemic in India, and unfortunately, until we can start to see India sort of turn the corner on cases, hospitalizations, and deaths. And again, I can't express enough, what a tragedy is right now. As we talked about before the show, 312,000 people with new cases yesterday in India. That's a very large number, even for a country with over a billion citizens. So, I mean, that is a negative, and it sort of looks like things might get worse in India for the next few weeks before they get better. I think while that's occurring, the rupee is likely to be weak, and that's because people feel that the Indian government is going to have to do more to stimulate the economy coming out of this than what they've done previously. Obviously, the central bank there has been concerned about inflation and interest rates as well. And so I think in the short run, I think that dollar strength versus the rupee is likely to continue. I think over the next several years, I think the rupee can have great gains against the dollar. But in the short run, I think it's going to be tough. And I think that will put a little pressure on the Indian market.
Well, absolutely, point taken, Randy. And I think their efforts are getting on a little bit late, but I think, it's an unfortunate tragedy, but we're trying to get there. The second aspect that I wanted to put forth, apart from the US market, the second leg that we spoke about is the emerging markets. So is the emerging space, we leave aside India, we'll discuss India separately. Outside India, I think, is the emerging space looking attractive to you from a global asset perspective and allocation perspective as well?
I would say, over the long term, love emerging markets. As you've heard me say many times, I think India is going to be one of the great investment markets over the next 10 years. You all know this, it's a great country, a lot of educated workforce, a lot of great growth companies on a secular basis, more innovation happening there. So I think it's going to be a great place to be over the next 10 years. In the short run, we don't like a lot of those markets, okay? South America in particular is having a very bad time. Brazil, I would highlight, rapid number of cases, hospital system overwhelmed, and some instability in the government. They've had a lot of people leave the government recently, including many of the top members of the military, which is very odd for a South American country. So there's a lot of unrest in places like Brazil. So I think Brazil, India, some of the other emerging markets are going to have a tough time. The markets we like right now actually tend to be the Asian markets. We like Taiwan a lot, and we like Korea. And if you think about that, those economies, and more importantly, really their markets, are more tied to the US tech cycle. Sure. Particularly Taiwan, which is the largest manufacturer of semiconductors in the world. And so we like those plays. On a secular basis, we still like tech. As a lot of your viewers know, there's a shortage right now in semiconductors. That helps places like Korea and Taiwan. So we would actually favor those markets. We're a little bit more nervous about the Chinese market, which hasn't been acting well. There's a little bit of uncertainty on what's happening in some of those big leadership stocks. Alibaba is one that's been running into some issues with the Chinese government. So it's a lot of times hard for a market to get going if it's a lot of its big leadership stocks are lagging. But in emerging markets right now, the markets we like Taiwan, we like Korea.
Wow, great to hear that, Randy. Let's focus in terms of the other developed markets, right? So what's your view in terms of which developed markets are probably looking attractive outside the US at this point of time? Case in point, what do you view the Japanese markets, and what is the best European market as per your methodology?
The European markets have done well, Germany and France in particular, but the market that we're probably most interested in Europe right now is actually the UK. I feel like the UK is kind of second in the chain behind the US in terms of getting through the COVID pandemic. They're doing a good job on the vaccine rollout. They're starting to reopen after a very, very, very strict lockdown. That market's up more than 8% year to date. I think they're going to have kind of an economic burst of activity similar to the US as things reopen. So I really like that market the most out of the European markets. Germany's had a tough time with the vaccine. And also, they had planned on using the AstraZeneca drug, which is the one which apparently has blood clot issues. And they've also been distributing it more through the government versus local pharmacies, which has also slowed down the process. So even though Germany and France have had big moves here, they're actually lagging the UK in terms of their reopening. So I would actually shy away from those right now and really focus on the UK. That being said, I think the second half of the year is going to look much better for Europe, especially the fourth quarter. And I think 2022 could be a great story in terms of economic growth in Europe. So I do think, while some of that's priced in, I still think it's going to have similar kind of earnings gains to what we're talking about in the US. I just think they're 6 to 9 months behind us. And I think that European earnings growth story is really going to be a 2022 type story. In terms of Japan, they're lagging the US and they're lagging Europe in terms of the virus. I mean, really what's driving these markets, not to be simplistic, is two things. All these global markets, where you are on that COVID pandemic timeline and how much stimulus is your government putting into the pipe to help the economy. And the pecking order really goes US, UK, developed Europe, and then you start to go down to other countries. So I do feel like Japan right now is not through all the worst of it yet. So I'm a little bit more of a wait and see right there. Obviously, they've got some great exposure to technology as well. And consumer spending will ramp up there again once things reopen. But right now, people are being pretty cautious in Japan, particularly in Tokyo. And so I think that economic burst is similarly more like a 2022 type event, which is what I think also, by the way, is probably going to happen with India. I think India's big economic reacceleration is probably a next year event, not a this year event.
Great. I think you answered my next question yourself. I think I was asking you the stacking up of markets. You've given that to us. Now let's take into context the Indian market in perspective.
Sure.
If the US markets are expected to do extremely well or hold on, Randy, I think, do you see exporters as a theme from an Indian perspective do really, really well? And within that pockets, I think, is it the traditional IT pharma that we stick to?
I think India's got, as I mentioned before, a lot of things going for it. But one of the things it's got going for it is that a lot of European and American companies are going to try to diversify their supply chain. So previously, a lot of supply chain was in China. And I think given the global political tension between the US and China, as well as the pandemic, it's shown you want a more diverse supply chain. And I think as companies diversify their supply chain, one of the big beneficiaries is actually going to be India.
Sure.
So I do think over time, more manufacturing and R&D are going to shift into the Indian market.
Sure.
So that's the first thing. The second thing is India's got a lot of strong companies in the basic materials and chemical space. I think as the world reopens, what happens initially is that production does not ramp as quick as demand, and that causes shortages, and that benefits the pricing in a lot of these kind of, basic material chemicals, et cetera, companies. And so I think some of those stocks can do really well. One of the stocks we like in India is Vinati Organics, which is a leading supplier of specialty chemicals. And so I think a lot of those basic material stocks in India are actually going to do quite well. The steel stocks have had a nice move. Tata Steel is a company we think is pretty interesting, and it's kind of we think turning the corner here. The only risk to that story is that if the virus is very bad in India, that can actually hurt their production because they can't have workers come in to produce. But if we look beyond that, I do think there's going to be demand for a lot of those inputs to production, both in India and globally. We're seeing that, and you've seen that in the moves in the commodities this year, right? Copper, steel, rare earths, all having very, very big price moves. So there is going to be a lot of demand as everything kind of reopens.
Great to hear that. Again, I think you took me to the next question yourself. So I think the commodity cycle, Randy, I think what's the best way to play that? So if I break that into two parts, right? Precious metals, and you're probably looking at ferrous and non-ferrous. So you already spoke about steel and steel companies at this point of time, but is metals or the commodity index just binded by the fact of demand-supply dynamics? Input costs also play significant traction in terms of how the overall operating leverage plays out. So I think, how would you look at this commodity cycle? Let's talk about the ferrous or the non-ferrous plays here, and what are the factors that investors should probably be looking at for the sector as well?
I think you really want to look at where is their longer-term demand with regards to the commodities. Gold and silver have not done as well this year. Gold, I believe, is actually down year to date. I think there's a variety of reasons for that. So I really want to favor commodities that I think have an underlying secular story that is going to keep the demand up. And I'm just looking at my notes for 1 second. I don't want to misquote this. And one of the areas I really like is, I do like copper. Copper is an area where, because of the move towards more green energy, things like batteries, EV vehicles, et cetera, I think that their demand is going to be very strong there. It's obviously had a good price move this year, but I think demand has a longer tail there than some of the other commodities. So that would probably be my favorite out of the metals right here. Lumber's doing better as well. Lumber right now, at least in the US, is really driven by home building demand. One of the things that's happening globally because of the pandemic is that people are actually more focused on where they live. Everybody wants a bigger home now. People are thinking, maybe this is over, maybe it isn't. What if there's another lockdown in a couple of years? I want to have a bigger space. I want to be able to get away from my kids and work in the other corner of the apartment or whatever. And so that's really fueling, I think, building materials. But I think copper is an easier story longer term.
Sure. So copper is the best non-ferrous metal that Randy, you like. Steel, I think, still relatively bullish over the medium term.
I mean, I would say steel right now. We do like Tata Steel. It's been really doing a lot of backward integration to improve its supply chain. I think it's going to help the margins over time. They're also trying to get into more specialty materials. I think I like the steel companies that are moving that way as opposed to just pure basic steel. There's a lot of money still to be made in specialized steel products where you have some kind of a value add. I think Tata is moving that way, as well as they're leveraging their balance sheet. I think with steel in general, it's more company specific for me than just saying I love the commodity. I think there's a little bit of a blip up as we reopen and production ramps. But I think longer term, I want to buy, if I'm buying steel stocks, I want to buy a steel stock, a steel company where something in addition is going on than just the basic demand, where there's something special happening. So with that one, I feel like it's deleveraging the balance sheet, moving more into specialty products, while allowing for a margin expansion. And that's kind of why I like that name.
Wow. So I think viewers are getting this, right? I'm getting a lot of message on the chat, Randy, that they're getting your views, the strong views that you put forward. Coming back to the precious side of things, and you just briefly pointed out towards gold and silver and the kind of returns that they've generated year to date. Now, if I have to give you a choice, Randy, between gold and silver, what would it be and why?
I mean, in the in the short run, I mean, gold's really underperformed.
Yeah.
So I kind of feel like gold's getting ready for a bounce. Maybe this would be an appropriate time to hit the crypto. You know, gold has not functioned as much as a store of value as I would have thought it would have happened this year. I do think what's driving cryptocurrencies right now is that, particularly in the US, people are looking for a store of value because they're worried about inflation, they're worried about interest rates, and they're worried about governments devaluing fiat currencies. So I think with Bitcoin in particular, what's interesting is Bitcoin was originally built by a sophisticated group of engineers who were trying to create a currency outside of the normal financial system. And what's funny about that is now the normal everyday financial system in the US has actually co-opted it. So
yeah.
Bank of New York, where I used to work, which is the largest custodian of assets in the world, is actually going to start custodying digital assets. Visa, MasterCard are bringing it into their system. PayPal's brought it in. Square has brought it in. Big companies like Goldman Sachs, Morgan Stanley, and Fidelity are going to allow their investors to start investing in it. So Bitcoin has kind of been what's the right word? Now it escapes me, but it's become sort of the standard of digital currency in the US, and that's actually helping demand. It's making it easier for people to buy and sell it. And so as that becomes standardized, I think that increases prices. I know it's in a little bit of a drawdown right now. The biggest risk to the crypto story is if the federal governments around the world try to outlaw it or really tax it very dramatically. But I think what people like about Bitcoin is there's only going to be 21 million Bitcoins ever mined. We're between 18.5 and 19 million already. So the bulk of it's out there. It's almost impossible to counterfeit it. There's a public ledger of the Bitcoins that have been issued. And so people are looking for a store of value, and I think that's one of the places they're going. I don't think Bitcoin is going to be an effective transaction mechanism, and I don't want to spend too much of our time getting into this, but it's actually a very slow processing system. So it's not like you're going to be doing hundreds and hundreds of thousands, or more like millions of transactions every minute globally using Bitcoin. It's just too slow with the blockchain technology. But it's very, very, very secure. Despite some of the hacks that have happened to some of the crypto exchanges in the past, it's actually very secure now. And so I think people are going to keep going there as part of their portfolio as a store of value. In the short run, it's kind of an alternative to gold. And I do think over the next several years, it actually is going to move higher. Now, some of the other smaller cryptocurrencies that have moved up recently, I think the jury, to use an American colloquialism, I think the jury's kind of out on that. I'm not sure how they're going to play out. If I was going to speculate in the crypto market, I think I would stick with Bitcoin because of the ubiquitous nature of it and because it is becoming kind of standardized. I don't think you're going to see a lot of these other currencies go onto these platforms very quickly. So, I mean, hopefully I'm not going to be horribly wrong, but I do think it's headed higher over the next several years. It's going to stay volatile. I don't think the moves are going to be of the same magnitude they were before. So I don't think it's going back to, say, $20,000 per Bitcoin. But could it dip from here to 40, 45, 38? Sure. But I think over the next 3 or 4 years, yeah, it's going to be a lot higher than where it is today.
Brilliant, Randy. Wanted your views on that. In fact, that was precisely my next question. In fact, yours, I think what I'll ask Rucha is that Randy has written a brilliant article related to Bitcoin in Forbes. So we'll get a copy of that. And for all you viewers, I think we'll forward that. I think it's a very, very interesting read. You should read that, the extensive studies that Randy has done on Bitcoin and digital currencies as well. I think a follow-up question, Randy, to Bitcoin, I think what I wanted to ask and what a user has also put in.
Sure. Ethereum
chain, I think that's quite fast, right? So I think how you view that as well, or even Dogecoin for that matter at that point.
I mean, they've gone up very quick. There is a lot of speculation in the U.S. financial markets, and the reason is there's so much cash kind of sloshing around from the Fed and the federal government. The other thing that's happened in the U.S. is they made it a lot easier to trade everything with apps for your smartphone like Robinhood, et cetera. And with everyone locked down, here's what I've discovered. When everyone's locked down at home, they like to gamble and they like to play games, right? So video games have had a great increase in business, and legal gambling has had a great increase in business. And things like the stock market, and cryptocurrency, et cetera, have really been popular. You know, millennials who are not huge investors in the US have really moved into investing during this pandemic. And a lot of that speculation has gone into cryptocurrencies. Maybe, I know some of them have had really, really big moves. For me, cryptocurrency is speculative enough as it is, since it's not backed by any hard asset, that if I'm going to speculate, I'd really rather just stick with Bitcoin instead of getting into some of the more esoteric ones. And again, I think Bitcoin's strength is its ubiquity and its adoption by the financial system. I don't think a lot of these alternative cryptocurrencies are going to be adopted broadly. And so long term, I do worry about what the real value is. And one thing to say in addition to that, some of the governments are starting to issue their own digital currencies. China's doing it. And so that is going to be a competition to some of them. So, and I'm not that knowledgeable on every single cryptocurrency that's out there. They seem to be multiplying like rabbits these days. And so again, if I had to favor one, I'd favor Bitcoin. I think it's volatile and speculative enough. And I think that's the one that has the highest likelihood of continued success from here. I still think, 3 to 5 years out, I think it can be north of 100,000 per Bitcoin.
Wow, I got your views loud and clear there, Randy. Now I think let's shift the focus in terms of the other aspect. So I think cryptos and what is happening with electric vehicles, right, globally. So I think what Elon Musk is doing with Tesla, again, accepting Bitcoins for payments there as well. So how do you see this entire EV space ramping up? Developed world can do it faster. Emerging might take time. But what's your perspective in terms of this entire EV space at this point?
So if I understand the question correct, I'm not 100% sure I do. One of the big changes in the pandemic, and it's happening definitely in places like India, is that the use of paper and metal money is dropping dramatically.
Yeah.
So while it may seem like we've already moved a very far way into electronic currencies and forms of payment, we're actually still relatively early on in the cycle relative to the globe. And so I like a lot of those stocks. And there's an ETF that I should mention. I own this, so I want to make sure I disclose that. There's an ETF in the US called iPay, which tracks all of these, and it includes all the major components, includes PayPal, Square. It also includes the credit card companies like Visa and MasterCard. Visa and MasterCard have seen their volumes already turn up and go positive in the US. They're trending closer to flat globally because cross-border transactions are very weak. But that's going to change as we move through this calendar year, and in particular, once Europe gets going. So I actually still really, really like the credit card companies.
Wow.
One thing I would note in the US is that credit losses have actually been better than people expected them to be when we went into the pandemic. And that's been true for the credit cards. It's also been true for the major US banks, people like Citibank or JP Morgan, et cetera. So I actually really like what we would call fintech or electronic payment systems. And I still like the credit cards. I think it's a great place to invest. And I think when I'm in Miami right now, when you go around Miami right now, there's a lot of places right now that don't even use paper money anymore. You go to a lot of small restaurants and bakeries and things like that, and they only take electronic forms of payment. So I think that's gonna continue. And so I still think that theme, while it may seem we're very far along, is actually nowhere near done. And I think that's a great place for viewers to invest on a secular basis over the next couple of years.
Wow, super. Now let's come to the cycle in terms of the electric vehicle or the electrification.
Okay, sure.
So I think this EV theme is moving quite rapidly globally, Randy. So what are your thoughts, your quick thoughts in terms of that entire cyclical movement towards EVs and the adoption thereof? Do you think that's going to happen over the next 3 to 4 years?
It's absolutely going to happen. The biggest impediment to that is just creating the networks of charging stations around the globe. Yeah, sure. You'd be hard pressed to drive from Miami to Los Angeles right now in an EV vehicle. You'd have to really plan out your trip and make sure every leg was the right length. But that's going to change over time. Last year, there were 2.1 million units sold. We think that's going to be 12 million by 2025. Okay. That's a CAGR. That's a growth rate of 42%. But even when you get to that, so even when we look sort of 4 or 5 years out, you're still talking about it only being 10 to 15% of the total auto market. It's only 3% right now. So it's going to be a lot bigger. Obviously, Tesla is the leader there, sure. But a lot of the big companies, especially the German automakers, have held back in that space. I think they're going to get more aggressive over the next several years. You're going to see a lot more models, and I think that's going to help accelerate it. So I'm a big believer. I'm also a big believer, as I've actually written about this, I think in one of my Forbes articles, big believer in green energy. And I think that's going to happen globally. It's going to happen in India. It's going to happen everywhere. And so I think plays on that are still a great place to be. Generally, I would encourage people to look at things like ETFs or some of the larger, more established companies. A lot of those companies are actually in Europe. There's a lot of good clean energy plays in Europe, but I'm a big believer on it. In terms of pure plays on the EV market, I mean, obviously Tesla's one. Another one is NIO, ticker NIO is one of them, which is a supplier. I think that auto sales in India this year and in the US have been weak. One thing that's funny to note, and I'm not sure if the viewers are aware of this or not, but the chip shortage, the global semiconductor shortage is now actually starting to hit US auto production. On the way to the office this morning, there was a story on the news, on the radio, about how I believe, I hope I quote this right, it was Jeep, Dodge has slowed their production because of a lack of chips and are actually furloughing, unfortunately, some workers. So auto production is probably not going to meet demand this year in the US, which is going to cause some built up demand for next year. So that is an issue, but so I think traditional auto maybe not as strong as it normally would be because of these supply problems. I do think traditional auto, hopefully to be more clear, is going to get into EV more. Still like the space, big believer in things that help with battery technology. Battery technology is probably the biggest choke point as we move to a more electrified global energy system. But a big believer in it and think it's a good place to invest secularly over the next few years.
Oh, absolutely, point taken, Randy. In fact, JLR, because of chip shortage, they have announced a shortage in their production facilities in the UK for a week. So what you're saying is absolutely true. And in fact, you have taken, as you always done right now, I think taken the next question away. So I think I was coming down to battery makers as well, because the auto ancillary space to provide for the EV ecosystem, to drive the powertrain when it comes to the entire way in which the EV will work, or even the lighting system as an example, right? Some components will still continue with the EV ecosystem. So any auto anchors, apart from batteries that you're probably looking at, are you interested in these LED manufacturers or anything which are having substantial parts in the powertrain itself?
I am. I have to mention one question I saw flash across the screen. Are semiconductors in electronic vehicles? Yes. Semiconductors, I don't mean this sarcastically, I mean this respectfully. Semiconductors are in electric vehicles. They're in all cars. They're an increasingly large component of the input cost of an auto. One of the stocks we like, which I feel like I'm talking my book here, but I also own this, full disclosure. But one of the companies we like as a company is we really like Nvidia. It's a major semiconductor stock in the US. And we see a lot of these semiconductor companies moving more and more into auto, as well as a variety of consumer and commercial goods. And we think semiconductor content is just going to keep rising. So, that is a major area. The battery technology, I'm not as up to speed on all the battery stocks as I should be. I think that's an area where I think it is an attractive place to invest. I think there's going to be some major breakthroughs. The biggest story with the batteries for everyone, most people probably know this on your call already, but the biggest issue with batteries is the ability to store energy. And so right now, if you look at the electric grids around the world, we can't store as much electricity as we want when we have excess electricity. But I think over time, we're going to have more and more technological advances there. And that's really going to accelerate the whole move to green energy. So I think companies that can create larger batteries and have better storage capability, electricity, are going to be very, very good plays. I'm sorry that I'm not as up to speed on all the names right there. I'll try to do that next time when I come back.
I think, Randy, you're covering 70 markets. You're covering stocks there. So it's impossible to remember. I don't remember the names in our market itself. So great job you're doing. No, so I think the logic is very simple that you put forth, and it's well taken. Now, twofold question here again. One aspect in terms of how Indian markets will have the transition towards EV. Do you still think that over the next few years, it will still be an internal combustion engine market still driven by petrol and diesel engines?
In India, it is going to be as you build out the infrastructure. So in the short run, that's definitely going to be true. I think, and I've been to India, love it, have had great times when I've been there. But I do think one of the things, if I can be very blunt, is that I think all of your viewers would agree. One of the things we want to do is we want to improve the environment in India. We want a cleaner environment for all the citizens. And part of that is going to be moving to electric vehicles. I know the government is intent on doing that over time.
Sure.
I think over the next several years, it's going to be really more driven by the combustion engine. But I think over time, it's going to transition to EV. So I think that's a huge, huge opportunity. I'm not sure off the top of my head who the largest EV seller is in India. I don't know if it's Tesla or not, but I do think that's going to be a major, major area. I think some of the local auto companies like Maruti Suzuki are going to move into that space over time. But in the short run, it's really going to be combustion. Again, they're not having great sales this year.
Yeah.
I think that's got to wait for the lockdown to really abate. And so I think I don't really see those stocks really picking up dramatically until we start to look to next year. So I think they're going to be laggards for the next couple of quarters.
Oh, absolutely. Point taken, Randy. Now let's get to the point, and I'm also taking a few questions as I'm asking you. So I think
Sure.
we're covering a little bit of Q&A as well.
That's great.
So you just pointed out towards green energy, right? So is this one sector, because the entire ESG theme globally has been ramping up over the last few years. Do you think renewables, investment in renewable energy, green energy is the theme going forward where institutional investors will look?
I absolutely do. This is the best way I can give an analogy. So I got into the business in 1990 when I got out of college. Okay, and in 1990, the big theme in the U.S. stock market was that big wave of biotech companies, and the stock that really drove it all. This is probably too long a story. The stock that drove it all was Amgen, right? Amgen first had a drug that stimulated your red blood cell count. Then they had a second drug that stimulated your white blood cell count. And that really created a biotech company that was doing billions of dollars in sales.
Sure.
That biotechnology wave gave you like a 20-year theme. And I think you're talking about a similar theme in renewables. I think that we are still at the beginning of a 20, 30-year theme. The Biden administration was out yesterday talking about how they would like to reduce the carbon footprint dramatically by 2030. The European Commission has very aggressive targets for 2030 and 2050. This is going to happen. It's a huge theme. We're early on in it. I think renewables are a great place to invest. And I think one of the most interesting themes is that in the US now, on new builds, so on new construction, it is just as cheap to build a renewable plant as it is to build a legacy fossil fuel plant.
Okay.
So in certain markets, you're already at parity on cost because of the advances in technology and efficiency. And that is really going to drive more and more renewable electric generation going forward. And as that moves, it's going to allow you to do other things like expand the vehicle fleets, et cetera. So I am a big believer in it. I do think it's a great place to invest. Some of the stocks that are interesting there are stocks in the solar and wind areas. There is not as many leadership stocks there in India. but I do like it. Some of the names I like are Ørsted, which is a stock in Denmark, which is one of the leaders in wind generation. Siemens Renewable is a stock that we're very interested in. I guess the biggest one in India is really Adani Green. I hope I pronounced that right.
Yeah.
Obviously, they're the leader in the energy and power space, but I know that's been a hot stock, but I continue to believe it long term. These are going to be volatile stocks. They're going to have big moves up and sharp moves down. But I do believe over time, I've sort of done it this way instead of this way. I do believe over time it's going to be up and to the right. So continue to like that space.
Brilliant, absolutely. So I think getting to the questions now, Randy, I think I've covered this part of our conversation as well. I think a few users wanted to understand your views on the banking sector when it comes to India, the banking and the financial spaces.
Yeah, I think the financials which have been laggards this year, will probably catch a bid at some point later in the year. I think for that to happen, we've got to see a little bit more stabilization of the virus. Now, I understand that the market will look forward on that, but right now things are still getting worse.
Yeah.
And so the issue there is two issues. The first is, what is that going to mean for credit losses for the banks, where it's actually been pretty good in India last year, okay? I mean, the credit losses have been fine, but I think we want to see how that's going to play out. And we're also still curious on the government response.
Yeah.
Once we get a sense that the virus is starting to turn the corner, what should happen in India is the yield curve should start to steepen more and loan demand should be better. Right now, loan demand is suffering, especially in the small and medium business area because of the virus. So, we try to take our signals oftentimes from the market. I would like to start to see those stocks like HDFC, which is obviously a big leader in India, and Kotak. We'd like to see those stocks start to do better on a relative strength basis and see those charts start to firm up and create a bottoming pattern up to the right before we got more active. So in terms of one of the questions, would I buy the dip right here? I wouldn't buy them yet. I want to see the stocks start to increase their relative strength before I start to add to those positions. My gut instinct is that late in the year, there's probably going to be a pretty good buying opportunity in these Indian banks, but I don't want to chase it right now because I'm just not that sure where we are in that virus cycle. If the virus gets a lot worse over the next 3 months, I don't think those stocks are going to be leaders.
Oh, absolutely. Point taken, Randy. I think one of the questions that has come earlier as well, pharma or the pharmaceutical sector has really been doing very, very well over the last few weeks, last few months as well, if you probably lay out the longer term charts. You still believe in the Indian pharma story?
We do, and we like a lot of the companies that are leaders in generics. The name of the stock I want to mention, of course, just escaped me, but we do like it. I mean, the stocks we've been favoring most recently are some of the testing companies, Dr. Lal and Laris Labs. But I do like the generic space, which India has been one of the leaders in. I think that's still a major opportunity. I think pharmaceutical manufacturing in India has continued to grow, and I do like it. Obviously, a lot of the healthcare service companies have been doing well recently. People like Apollo Hospitals. But longer term, I actually prefer the biopharma industry in India, and those are where I would look.
Brilliant, super. I'm just going through a few questions, Randy, so you need to give me a minute and also a break because we've been speaking continuously for the last 1 hour. So just a minute to just catch up on a few questions as well.
In terms of that IT stock question, still like the outsourcers. Infosys is a name I really like there. It's done a great job of transitioning its book towards digital services. That's now I always talk about the stock, but that's now more than half the backlog. The margins are rising. So that's still a name I like. I like Tata Consultancy as well.
Sure.
I mean, I can't, no one can predict which sector is going to do the best over the next several months, but this is an area that India is a major leader in. Outsourcing is not slowing down. People are continuing to diversify their companies in terms of geography. So I still really like the major leaders, Infosys, Wipro, Tata Consultancy, over the next several years. If I had to pick one off the top of my head, I'd probably pick Infosys just because I love how they've switched the business. And importantly, one thing that's great to see in an outsourcing business like that is when the margins start to rise, and the margins are rising. So that's very important. Their services are getting more valuable to their customers, and that's reflected in the margins they're getting and the pricing they're getting.
Absolutely. So Randy, I think we've spent almost an hour with you. We discussed global markets. We didn't discuss Indian markets. We discussed emerging space. We discussed base metals. We discussed precious metals. We discussed cryptocurrencies. I've run out of questions, but I think your answers have been brilliant, to the point, very logical, and all the viewers probably enjoyed the chat that we had. So thank you so much, Randy, for taking time out. It's really late in the US out there, but you've taken the time. We really appreciate that. So thank you very much. We look to see you more often on this platform.
Yeah, let me say I'd love to come back, and to everyone listening, obviously it's a very tough time right now. Please take the virus seriously, wear your masks, social distance, wash your hands. We'll get through this over the next year, but take it seriously right now because it's a bad time. So I hope everybody stays safe.
Absolutely. To take Randy's point forward, guys, folks, I think be safe, be healthy, be safe, stay at homes, don't venture out if not required. We'll get over this. We'll emerge victorious locally and globally as well. So thanks, folks, for attending. Thanks, Randy, for sparing your time again. Thank you so much.
Thanks.
Bye-bye.